Ind AS 41 Agriculture. Ind AS 41 is applicable to biological assets relating to agricultural activity, agricultural produce at the point of harvest, government grant relating to assets covered under Ind AS 41. For animals, Ind AS 41 is applicable. Ind AS 41 is not applicable to intangible assets associated with agricultural activity, land related to agricultural activity, agriculture produce after the point of harvest, for which Ind AS 2 is applicable, government grant relating to bearer plants. For bearer plants, Ind AS 41 is not applicable, but it applies to agriculture produce on those bearer plants. For example, tea bushes, grapevines, oil palms, and rubber trees usually meet the definition of bearer plant and are outside the scope of Ind AS 41 and are covered under Ind AS 16. However, the produce growing on bearer plants, for example, tea leaves, grapes, oil palm, fruit, and latex, are within the scope of Ind AS 41. Next, definitions. Definition of biological assets. Biological assets includes living plants and animals. Living plants are of two types: bearer plant, non-bearer plant. Bearer plant means plant whose life is more than 1 year. Ind AS 16 is applicable to bearer plant. Non-bearer plant. Non-bearer plant means other than bearer plant, for which Ind AS 41 applies. Agriculture produce means harvested product of entity's biological asset is an agriculture produce. Agriculture activity. Agricultural activity includes biological transformation and harvest of biological assets for sale or conversion into agriculture produce or additional biological assets. Recognition criteria. Biological asset or agriculture produce are recognized if and only if entity controls the asset as a result of past event, probable future economic benefits exist, and fair value or cost can be measured reliably. Measurement. Measurement of biological asset. Biological assets are valued at fair value less cost to sell. Exception is if fair value less cost to sell cannot be measured reliably, then use cost model. Once fair value less cost to sell becomes reliably measurable, then measure the biological asset at a fair value less cost to sell. Next, agriculture produce at the point of harvest. It will be valued at fair value less cost to sell. Unlike biological asset, there is no exception here. That is, according to Ind AS 41, fair value less cost to sell of agriculture produce at the point of harvest can always be measured reliably. When agriculture produce after the point of harvest is classified as inventory, fair value less cost to sell as per Ind AS 41 will become the cost of inventory as per Ind AS 2. Next. Important point is tax cash flows must be included in the fair value measurement of biological assets as per Ind AS 41. Other important points relating to measurement criteria. Can grouping of biological assets or agriculture produce be done to facilitate fair value measurement? Yes, grouping can be done. What are the reasons due to which fair value less cost to sell of biological asset can change? It can change in market due to physical changes and price changes. Can contract price be relevant in measuring fair value? Answer is no, because entities often enter into contract to sell at the future date, and fair value should reflect the current market value. Next, can cost be considered as approximation of fair value? Answer is yes, only when little biological transformation has taken place since initial cost incurrence. For example, newly acquired livestock or impact of biological transformation on price is not expected to be material. In these cases, cost can be considered as approximation of fair value. What will be the fair value of biological assets attached to land when no separate market exists for such biological assets? In such a case, fair value of biological assets will be calculated as fair value of combined asset less fair value of raw land and land improvements. We will get fair value of biological assets. Gains and losses on biological assets and agriculture produce. Gains or losses on biological assets and agriculture produce may arise on initial recognition or from changes in fair value less cost to sell. All such gains or losses shall be transferred to P&L. Next, government grant. Government grant is usually received for biological assets only. Government grant for biological assets other than bearer plants. In case of biological assets measured at fair value less cost to sell, if it is an unconditional grant, transfer to P&L account when grant becomes receivable. If it is a conditional grant, transfer to P&L account only when conditions attached to government grant are met. In case biological assets are measured at cost, apply Ind AS 20. Example of conditional grant. For example, a conditional grant may require an entity to form in a particular location for 5 years and require the entity to return the entire grant if it forms for a period shorter than 5 years. In this case, transfer the grant to P&L account only after 5 years. However, if the terms of the grant allows part of it to be retained according to the time elapsed, the entity recognizes that part in P&L account as time passes.